We don't have a revenue problem.
Okay.
We have a spending problem.
Okay.
The difficulty, I mean, yes, they charge too much. The reason they charge too much is because they have to, because they spend too much. Right now, government expenditures are 30% higher than government revenues. Government expenditures in the U.S. are 30% higher than government receipts. This is not a tax problem. This is a spending problem. Let's look at the numbers if you want. This could make a very boring show, but it'll be interesting to me. The on-balance sheet liabilities of the U.S. government are $36 trillion. That's what we owe the bondholders.
Right.
Rather than getting smaller, by the way, U.S. GDP is $30 trillion. That number, rather than shrinking, is growing by $2.5 trillion a year. But that isn't the real problem, David. The real problem you can see by looking at me. There is the net present value of off-balance sheet liabilities in the United States, Medicare, Medicaid, Social Security, federal pensions, military pensions. This number, not according to some cranky old fat libertarian, but rather the Congressional Budget Office, the net present value of unfunded liabilities is $100 trillion, 3 times the on-balance sheet liability. And that number grows by $2.5 trillion a year. So every year, we get $5 trillion deeper in consolidated debt. Now, the gross federal government revenues, before they spend a dime, the gross revenues, tariffs, taxes, everything, is $5 trillion.
Right.
In other words, the debt grows every year by gross federal revenues. Mm-hmm. This is unsustainable. This is completely unsustainable. But beginning in the 1970s, the United States had fought the war in Vietnam, which we lost. We fought the war on poverty, which we lost. There was a guns and butter policy.
Yes.
Coming into the 1970s, we had unsustainable debt service, unsustainable entitlements, and we couldn't raise the taxes anymore because the highest marginal tax rate then was 70%. Mm-hmm. What we did was devalue the purchasing power of the US dollar.
Okay.
So we honored the nominal value of our obligations. So some old codger who in 1970 was getting $800 a month in Social Security still got his $800 a month, but it bought $200 worth of goods and services. According to the Office of Management and Budget, the purchasing power of the US dollar in the period 1970 to 1980 fell by 75%. This is a government number, not my number. Not coincidentally, in the same period of time, the price of an ounce of gold went from $35 to $850.
Yes.
But going back to your original problem, this isn't a revenue problem. This is a spending problem. You don't get elected by, let's say that you're running for president of the hog farm.
Yeah.
You don't get elected by telling the pigs you're going to feed them less. There's a really interesting book, which I urge your listeners to read, called The Triumph of Politics by David Stockman. Okay. David Stockman was the director of the Office of Management and Budget in the Reagan years. And Reagan actually had a mandate to reduce the size of government. He won by a landslide. Trump won by an eyelash. And in the book, The Triumph of Politics, David Stockman talks about how politics derailed the Reagan Revolution in the first 120 days of Reagan's first term. I urge people who believe that the Department of Government Efficiency, run, by the way, by a billionaire who's enjoyed several $1 billion worth of subsidies, the idea that the Department of Government Efficiency is going to greatly reduce the size of the U.S. government is laughable. Anybody who would like to contradict that for narrative purposes should read The Triumph of Politics. The biggest expenses that we have, particularly because of American demographics, are entitlement expenses.
Yes.
Anybody who runs for president threatening to reduce the unsustainable benefits to voters is going to lose.
Yes.
It's an unsolvable, conventionally unsolvable problem. I mean, I think if you look over the 4 years of his presidency, the gold price is going to do very well.
Yes.
I think it's going to do very well because I see the only political way out of our economic dilemma is, as you suggest, increase the money supply to print. We can't fund the expenditures with tax. The bills for entitlement are coming due. Our society is becoming older.
Yeah.
more beneficiaries, fewer workers. The only way out of this circumstance is to reduce the purchasing power of the dollar. Traditionally, that's been extremely good for gold.
Okay.
I think that the underlying strength of the U.S. economy isn't politics. It isn't Trump.
Okay.
It's the strength of the American commercial culture. The fact that the United States, despite all its difficulties, still invests $25,000 in capital expenditures per U.S. worker every year, about double the global average. Our culture also traditionally has been, like Canada's, very, very welcoming
Yes.
of immigrants. And it's also been a culture where 5 or 6 young kids could take over a garage in Sunnyvale and out pops Google or out pops Apple. I mean, the ugly truth about America's culture, or maybe the great truth, depending on your point of view, is that our individual persistence, our individual tenacity has funded our collective stupidity. The problem with that is that politics is trying to dumb down that individual initiative while increasing the collective stupidity. Well, if the banks that you're talking about, in particular the central bank, I agree wholeheartedly. I also agree that most very large commercial banks don't have the interests of the customers in mind. Whether or not that's good or bad for gold is a different circumstance, and we could have a long discussion about banking. As you know, I'm a career banker. I think the principal reason why one owns gold is the inevitability of the decline in purchasing power of the U.S. currency, of the Canadian currency, of the euro, of the yen, of the renminbi. Banking is a very, very, very good business.
Right.
You need to understand how to analyze banks the same way that you need to understand how to analyze mining stocks.
Yes.
If you buy banks as a class without knowing much about banking, it is very likely that you will experience a decline in your net worth. If, by contrast, you understand the banks for what they are and you learn how to analyze them as individual businesses, banking, with the possible exception of property and casualty insurance, is the single best business on the face of the earth that I know. In the current market, in the U.S., your retail cost of funds is 4.5%.
Yeah.
And you are putting out that money at prime or prime plus, which means you're taking a deposits of 4.5%. You're lending that money out at 8.5% or 9%. Mm-hmm. You are leveraged 9 to 1. So if you enjoy a 2.5% spread on assets, and you're leveraging that 10 to 1,
yes,
your returns on equity are insane.
Yes.
All you have to do, well, you'd have to do 2 things. You have to not allow your expense ratio to get too high.
Yeah.
And you can't make lending mistakes. You can't make too many lending mistakes. If you do those 2 things, you don't have to be the hyper genius that too many bankers try to be today. Mm-hmm. You have to pay attention to the fundamentals of banking. You have to lend to industries that you understand. You have to treat your customers, your depositors well. You have to make very sure that you don't make very long-term loans.
Yes.
That are funded with overnight deposits.
Right. So
you get caught in the interest rate trap.
Yeah.
If you mind those P's and Q's, the basics of banking, the 400 basis point or 450 basis point gross spread, the 2% cap on non-interest expenses, and the fact that you secure $1's worth of assets with 7 or 8 cents worth of equity, makes it an extraordinarily good business.
Yes.
If you just don't make mistakes. A good banker in an economy where there's too much competition shrinks his balance sheet. Part of the business plan of Battle Bank is that we will be the first major U.S. chartered bank which will offer credit facilities secured by retail holdings of gold and silver.
Interesting.
I consider gold to be a really, really, really good piece of collateral. If I loaned you money, David, to buy a house,
yes,
and you didn't pay me,
yes,
it'd take me about 9 months to foreclose, and then it'd take me a month perhaps to sell the house.
Yeah.
If I have your gold collateral and you don't pay me, I can sell that collateral 24/7 in 10 seconds. With Bitcoin, I don't know enough about the asset class.
Okay.
I don't know enough about how to sell it. If our bank were to be able to develop expertise in crypto, the answer to that is yes.
Okay.
My banks have always competed only in industries that they understood well.
I understand.
Part of being a lender is that you can analyze the business
Yeah.
from that business person's perspective, and that you can underwrite the loan, understanding the value of that collateral.
Right.
I'm uniquely qualified to do that in the mining business, in the gold business, in the oil and gas business. I'm reasonably conversant in agriculture,
Okay.
but that's a subsidized credit. I don't want to compete with the federal government who's willing to lose money.
Yes.
But in crypto, I have no such advantage.
Wow.
What I've learned in banking is that people who fail at banking try to lend to 500 industries where they don't understand 500 industries.
Yeah.
The people who succeed, every bank I've been involved in has been a bank that focused on something,
Yes.
did what it did better than other people did. And that's what this bank will do. So I understand that there are 120 something banks in application in front of the FDIC.
Yes.
The FDIC approved 2 in 2024. I'm 71 years of age. I don't have 60 years to wait. So what we're doing is we're buying an existing bank, something we should have done 2 years ago. My hope, in answer to your question, is that we're open for business in the second calendar quarter of 2025.